Hello everyone. If you are an income tax payer, then you should make some tax saving investment. Sir, what do you mean by tax saving investment? Those investment which provides the tax benefits. In other words, an income tax payer can reduce his income tax liability legally by making investment which provides the tax benefits. So I have categorized the entire tax investment plan into several parts. Today's video being the first part, I'm going to discuss with regard to the very popular investment plan, that is section 80C, specified investment. So this is here Abhijith Acharya welcoming you all for today's session. If you have not subscribed yet, please subscribe to my YouTube channel. If you like the video, please press the like button, and you can also share the videos to the n number of users. So without wasting any time, I will discuss today's topic. First of all, I would like to discuss with regard to the key points of investment that are covered under section 80C. First one, deduction of 80C is restricted to gross total income. Gross total income means your overall income. Income from salary, business income, or any other heads of income. If you add those income, it will be called as gross total income. Second, if 80C deduction is more than your gross total income, then such excess investment cannot be carried forward. For example, your taxable income or otherwise your gross total income is 1 lakh, then your 80C deduction is, for example, 1,50,000. Then extra 50,000 cannot be carried forward to the next years. It is totally lapsed. So please take a wise decision of the investment to be restricted to your gross total income. Next key point, deduction of 80C is not allowed against LTCG. LTCG, that is long-term capital gain, under section 112A, short-term capital gain under section 111A at the rate of 15%, tax rate at the rate of 15%, and special rates of tax, that is, for example, new tax regime that has been covered under section 115BAC. I have already discussed it in my earlier videos. LTCG under section 112A means tax rate at the rate of 10%. LTCG under section 112 is the tax rate is 20%. So for these categories, 80C deduction will not be given. Okay. Next key point, 80C is applicable only for individual and HUF SSC. It is not applicable for any other SSC. For example, company or society, any other SSCs, it will not be available for those SSCs. Next, maximum limit is 1,50,000. Next, extra 50,000 can be given under section 80CCD subsection 1B in case of NPS. If you contribute, if the SSC's contribution to the extent of 50,000 can be extra given in excess of 1,50,000. These are all the key points you should remember before investing to the 80C categories investment. Okay. Next, what are all the eligible investment? First one, LIC, life insurance premium. If you pay premium in respect of self, in respect of your spouse, in respect of your children. In case if you are a HUF individual, any member of your HUF family. If you pay LIC premium, then these are also considered to be 80C investment. Public provident fund. In case of individual, you can make an investment for self, in respect of your spouse, in respect of your children. In case of HUF, any member, in the name of any member, you can invest. Minimum rupees is 500 in a financial year. Maximum is 1.5 lakh. Then lock-in period. What do you mean lock-in period? You cannot withdraw that public provident fund. It is totally absolutely locked in that public provident fund account is 15 years. Up to 15 years, you cannot withdraw. You cannot. It is totally lapsed. It is totally locked. Next, employees' contribution to the SPF, that is statutory provident fund, RPF, that is recognized provident fund, or approved superannuation fund. This is also considered under eligible investment, categorized under section 80C. Next, repayment of housing loan borrowed from banks or financial institutions. If you remember, if you pay an interest of a housing loan, then it will be claimed as a deduction under section 24 subsection B under the head of income from house property. If you If you pay the repayment amount, that is principal amount, then that principal amount can be claimed as a deduction under ATC section. Okay. Next, investment in NSC, that is National Savings Scheme, National Savings Certificate, and along with that, interest accrued thereon can also be deductible, claimed under section ATC. Next, eligible investment. Tax saving deposits in a scheduled bank, for example, State Bank of India or any other bank, or post office, at least for 5 years. Then tuition fees paid for educations within India in respect of maximum 2 children. If you pay a school fees or bus fees or food fees, it will not be claimed as a deduction. Only tuition fees mentioned in your bill, only that portion can be claimed as ATC deductions. Okay. Next, deposit in notified bonds of NABARD. Next, deposit in SCSA, that is Senior Citizen Savings Scheme. If you invest in Senior Citizen Savings Scheme, then that also benefited under, that also claimed under ATC deductions. Next, deposit in Sukanya Samriddhi Scheme in respect of girl child. Okay. Contribution towards ULIPs, that is Unit Linked Insurance Plans. Next, units of mutual funds or UTI, that is mutual fund means in the sense of equity oriented mutual fund, that is SIP, similarly called SIP, systematic investment plans. If you invest in that also, it will be claimed as a deduction under section ATC. Okay. Notified pension scheme of UTI. Pension scheme also available under section and mutual fund. If you invest in those pension scheme, that also benefited under ATC eligibility. Next, we'll see under section ATCCC. Until we have seen with regard to the ATC deductions, now ATCCC, contribution to the pension fund of LIC or any other insurance company. If you ask any LIC persons, he is and he may be advising that pension fund is available. We can invest in that pension fund. That investment also come under section ATCCC. Okay. Eligible SSC. Only individual SSC can make investment under ATCCC. Amount of deduction is 1,50,000. These are the LIC pension plan. And for example, any other insurance companies, ICICI Prudential Pension Plan is also benefited under this section, ATCCC. Okay. Next, we'll discuss with regard to the section ATCCD, contribution to the pension scheme of central government or new pension scheme, NPS, or Atal Pension Yojana. In that also, some categories are there. Eligible SSCs, only individual SSC can make investment under NPS or Atal Pension Yojana. First, ATCCD 1. It is employees' contribution to the NPS. ATCCD subsection 1 talks about only employees' contribution to the National Pension Scheme. First, we'll see in respect of salaried employee, what is the limit? We'll see first. That is lower of employees' contribution or 10% of his salary. Whichever is lower will be treated as his contribution and will be deductible as investment under section ATCCD subsection 1. Okay. In respect of other individuals who are not salaried employee, then the limit is lower of SSC's contribution, that is individual's contribution, or 20% of his gross total income. Gross total income means overall his or her overall income. Next, what do you mean by salary? In respect of salaried employee, salary means his basic salary plus dearness allowances. This is considered to be salary in respect of salaried employee. Okay. With continuing with the same section, ATCCD subsection 1B, that is also employees' contribution. Additional deduction of 50,000 shall be allowed other than contribution covered under ATCCD subsection 1. That is employees' contribution. It will be in a better position if you see the following example. That is, SSC's contribution towards NPS is 1,45,000 during the financial year. His gross total income, because he is not a salaried employee, so gross total income information has been given, is rupees 6 lakh. It is an assumption. He can claim rupees 1,20,000, that is 20% of his gross total income as per the section, that is 1,20,000 under section 80 CCD subsection 1, and remaining 45,000 can be additionally given, and he can also claim in any other way, that is in the following way, that is he can first claim of rupees 50,000 because additional deduction of 50,000 can be claimed under section 180 CCD subsection 1B, and remaining 95,000 can be claimed under section 80 CCD subsection 1. There are two ways he can use to claim the deductions of this benefit and deduction of NPS contribution. Okay, with continuing with the same topic, that is another section, that is 80 CCD subsection 2, that is employer's contribution to the NPS. It is only applicable for the salaried employee, because employer-employee's contribution will be relationship will be existed only in the case of salaried employee. Employer's contribution is first taxable under the head of salary. First it is considered as his income, and then it is treated as a deductible investment under section 80 CCD subsection 2. Deduction limit is employer's contribution or 10% of the salary in case of non-central government employee, or 14% of the salary in case of central government employee. In brief, if you are a central government employee, then the limit is employer's contribution or 14% of your salary, whichever is lower. If you are a non-central government employee, then the limit is employer's contribution or 10% of your salary is the limit of deductions. In this case also, salary means his basic plus dearness allowances. This is very important. In case of a partial withdrawal from NPS by employees, withdrawal shall be exempt up to 25%. In other words, if you withdraw your money from your NPS account, then it is taxed only to the portion of 75% of your contribution. That means 25% will be exempt. Okay, this is very important clause. Next, section 80 CE, very important. This is an aggregate deduction of under section 80C. That is, we have seen LIC, contribution to the public provident fund, etc., plus 80 CCC, that is investment in or contribution to the LIC pension scheme or any other pension scheme, plus 80 CCD subsection 1, that is employees' contribution to the NPS. Overall, that limit should not cross 1,50,000. It is restricted to your 1,50,000. Okay, 1,50,000 is a limit of your overall section, that is 80C, 80CCC plus 80CCD subsection 1. Additional 50,000 can be claimed under section 80CCD subsection 1B. So overall 2 lakh is a benefit given to an SSC income tax payer. This is a brief explanations with regard to the investment covered under section 80C. If you like the video, please press the like button. If you have not subscribed yet, please subscribe to my YouTube channel, and you can also share this video to the n number of users. And if you have any queries with regard to this topic, you can mail to me in the following mail ID, and you can also WhatsApp me in the given phone number. And thank you for watching till the end, and we'll see in the next part, that is part 2. Thank you one and all for watching till the end. Thank you.